Have you ever wondered if Bitcoin could be your golden ticket to financial freedom? Let's take a moment to explore this question. Bitcoin, a term that has been buzzing around for quite some time now, is a digital currency, also known as cryptocurrency. It was born in the year 2008, a creation of an individual or group using the pseudonym Satoshi Nakamoto. Bitcoin's birth was revolutionary, marking a significant shift in our understanding of money. Unlike traditional currencies, Bitcoin operates in a decentralized system. There's no central bank or government controlling it. Transactions are peer-to-peer, directly between users, with no intermediary. These transactions are verified by network nodes through cryptography and recorded on a public ledger called a blockchain. This decentralized nature of Bitcoin is one of its most attractive features, offering a level of freedom and privacy not often found in traditional financial systems. Now you might be thinking, that's all well and good, but how does one invest in Bitcoin? Well, it's quite simple. Bitcoin investment involves purchasing Bitcoin with the expectation that its value will increase over time. You see, Bitcoin operates on a supply and demand model. There will only ever be 21 million Bitcoins in existence. As more people become interested in Bitcoin, the demand increases, and so does the value. It's a bit like buying a piece of land in an up-and-coming neighborhood. You're buying with the hope that as the neighborhood grows and becomes more popular, the value of your land will increase. In the same way, Bitcoin investors buy Bitcoin, hoping that as it becomes more widely accepted and used, its value will rise. But like any investment, Bitcoin comes with its own set of risks and rewards, which we'll explore in more detail later on. For now, remember that Bitcoin investment isn't a get-rich-quick scheme. It requires patience, strategy, and a willingness to navigate the volatile cryptocurrency market. Intrigued? Let's delve deeper into the world of Bitcoin investment. Now that we've introduced Bitcoin, you might be wondering, how does one actually invest in it? Well, the first step is purchasing Bitcoin, and there are several platforms where you can do this. These platforms are known as cryptocurrency exchanges. Just like the stock market, you can buy and sell Bitcoin on these exchanges based on the current market price. But here's where it gets a little different. When you purchase Bitcoin, you're not getting a physical coin. Instead, you're buying a digital asset. To store this asset, you'll need a digital wallet. Think of it as a virtual bank account, but instead of storing dollars or euros, it stores your Bitcoin. There are various types of digital wallets available, from hardware wallets that store your Bitcoin offline to software wallets that live on your computer or mobile device. Now let's talk about security. In the realm of Bitcoin investment, security is paramount. When you set up your digital wallet, you'll receive what's known as a private key. This is a unique string of numbers and letters that acts as your digital signature. It's what you'll use to access your Bitcoin and authorize transactions. It's incredibly important that you keep this private key safe and secure. If you lose it, you lose access to your Bitcoin. And if someone else gets a hold of it, they gain access to your Bitcoin. Another essential security measure is two-factor authentication, often abbreviated as 2FA. This adds an extra layer of security to your digital wallet. With 2FA, even if someone manages to get your private key, they'll still need a second piece of information to access your Bitcoin. This could be a code sent to your phone or a fingerprint scan. In the world of Bitcoin investment, understanding how to buy Bitcoin, knowing the importance of a digital wallet, and prioritizing security through private keys and two-factor authentication are all crucial steps. With these tools at your disposal, you're ready to start your Bitcoin investment journey. But before you dive in, it's crucial to understand the risks and rewards of Bitcoin investment. Picture this. You're on a roller coaster, your heart pounding as you ascend the highest peak, and then, in a split second, you're plummeting down at breakneck speed. That's Bitcoin for you, a thrilling ride of highs and lows, driven by its notorious volatility. It's this volatility that can lead to high returns, making millionaires overnight. But remember, the same volatility can also result in significant losses, turning fortunes into dust in the blink of an eye. But the risks of Bitcoin investment aren't just about its price fluctuations. There's a darker side to this digital frontier that we need to talk about. First up, hacking. Yes, despite blockchain being touted as a secure technology, Bitcoin exchanges have been targeted by hackers, leading to losses of millions. And then, there's the regulatory risk. Governments around the world are grappling with how to regulate cryptocurrencies, and any sudden changes can have a major impact on your Bitcoin investment. Now let's flip the coin and look at the rewards. High returns are undoubtedly the biggest draw. The value of Bitcoin has seen astronomical growth since its inception, creating a new class of digital millionaires. And then there's the allure of being part of a financial revolution. Bitcoin and other cryptocurrencies are challenging traditional financial systems, decentralizing control, and offering the potential for a more equitable financial future. So yes, Bitcoin investment can be risky, but it also offers incredible rewards. Think of it as a high-stakes poker game. You could lose it all, or you could walk away with the pot. What's important is that you understand the game, know your limits, and never bet more than you can afford to lose. Balancing these risks and rewards is the key to successful Bitcoin investment. So, how can you navigate this volatile market? Let's talk strategy. When it comes to Bitcoin investment, there are two main strategies to consider: long-term holding and short-term trading. Long-term holding, often referred to as hodling in the Bitcoin community, is a strategy where you buy Bitcoin and hold on to it for an extended period, regardless of the market's ups and downs. This strategy is based on the belief that, in the long run, the value of Bitcoin will increase significantly. It's a more passive approach and requires patience and a certain level of risk tolerance. On the other hand, short-term trading involves buying and selling Bitcoin within short time frames to take advantage of market fluctuations. This strategy is more active and requires a good understanding of market trends and timing. It can potentially yield higher returns than long-term holding, but it also comes with higher risk and requires more time and attention. Regardless of which strategy you choose, doing thorough research and staying informed about market trends is crucial. The cryptocurrency market is notoriously volatile and can be influenced by a wide range of factors, from global economic events to technological developments. Therefore, it's important to keep up with the latest news and analysis to make informed decisions. In addition to research, diversification is another key component of any investment strategy. While Bitcoin has the potential for high returns, it's also highly risky. By diversifying your portfolio, you can spread your risk across a range of different investments. This could include other cryptocurrencies, as well as more traditional assets like stocks and bonds. It's also worth noting that, while there are numerous strategies and tips available, there's no one-size-fits-all approach to Bitcoin investment. Everyone's financial situation and risk tolerance is different, and what works for one person may not work for another. Remember, the best strategy is one that aligns with your financial goals and risk tolerance. It's about understanding your own financial situation, setting clear goals, and making decisions that help you achieve those goals while managing your risk effectively. To recap our journey into Bitcoin investment, we've traversed a landscape that's as exciting as it is unpredictable. We've explored this frontier of digital currency, delving into its unique features and the mechanisms that underpin it. Bitcoin, as we've learned, isn't just another currency. It's a revolutionary form of digital asset that's decentralized and operated by a network of computers worldwide. The concept of mining, the process of verifying and adding new transactions to Bitcoin's public ledger, the blockchain, is the backbone of this system. We then navigated the mechanics of Bitcoin investment, understanding how to buy, sell, and store Bitcoin. We've seen how digital wallets play a crucial role in the process and how exchanges act as the platforms for these transactions. In our exploration of the risks and rewards of Bitcoin investment, we've underscored the fact that as much as Bitcoin can offer substantial returns, it's also subject to dramatic price fluctuations. The very volatility that can lead to significant gains can also result in substantial losses. This is why it's paramount to understand that investing in Bitcoin should not be done blindly or rashly, but with a clear understanding of these potential risks. We've also highlighted strategies for Bitcoin investment. We've stressed the importance of starting small, diversifying your portfolio, and not being swayed by the market's emotional roller coaster. Remember, successful investing is more about consistent growth over time than about making a quick fortune. Throughout this journey, three key aspects have remained constant: the importance of research, security, and careful decision-making. Research is your compass in the often turbulent seas of Bitcoin investment. Security is your lifeboat, protecting your investment from potential threats. And careful decision-making? That's your captain, steering you towards your financial goals. With this knowledge, you're one step closer to becoming a savvy Bitcoin investor. Here's to your future success in the world of Bitcoin investment.